Hello, Bitcoin Basics listeners. Thank you for joining us. So what we have here is a series that I did for a local radio station in New Zealand called Fix the Money, Fix the World. Some of you might recognize that phrase. And what I've done is just gone through basic highlights of what's happening in the economy and how it actually affects the everyday person. So we've just uploaded those to the Bitcoin Basics podcast. Thank you, Gordon, for doing that. And yeah, I hope you enjoy. Thank you.
The following podcast is a live recording of a radio show first broadcast by FreshFM with assistance from New Zealand On Air.
Hello, everyone, and thank you for joining me on FreshFM. This is Faris Mali with Fix the Money, Fix the World. Today we are on episode 2. And before we launch into today's topic, first and foremost, I actually need to make a correction for last week's episode. So last week we spoke about inflation, and one of the mistakes I made was in a statistic where I talked about the New Zealand wage inflation versus inflation, and I gave a number of 2,500%. Now, first of all, if you're paying attention, you may have picked up inflation of what, because when you talk about inflation, it's got to be of something specifically, and I never mentioned of what. That was actually from a previous presentation that I did, and that slide was in reference to something else entirely taking place since 1974. But inflation, what I meant to mention was consumer price index, so what we're paying every day. So even though wage inflation went up by around 180%, the CPI index since that period actually went up by 200%. And real estate was much, much more. So correction on my part, apologies for everyone, and I will add that correction onto the show notes, which you can access on my website, farismali.com. All right, having gotten that out of the way, let's talk about today's topic. So what are we going to look at today? Today we're actually going to look at the US dollar. Why we're going to look at the US dollar, you'll see in a second. But one of the main things we're seeing is the US dollar is now at a rate against other currencies. It's actually the highest it's been for almost 20 years, since 2002. So when you are comparing a currency, you can't just compare the Kiwi dollar to the Kiwi dollar. That's 1-to-1. We look at how does a Kiwi dollar compare to other currencies. So there's about an 8-cent difference between the Aussie dollar and the Kiwi dollar, and there's almost a 40-cent difference between the New Zealand dollar to the American dollar. Well, the American dollar has been strengthening amongst other currencies. What a lot of investors, traders use to gauge just a big picture of the US dollar is called the DXY or the Dixie. So if you ever go to TradingView or a chart where it brings up, basically, my kids call it peaks and mountains, where it just shows you how things are trending. The DXY is the code for that. So the DXY is essentially the US dollar weighted against a bunch of other currencies. Mostly it's weighted against the euro, the British pound, the Japanese yen, and then a few others are included in there. But those are the main ones. So the DXY just gives you an indication of how strong or weak is a US dollar doing internationally. And right now, it's actually the strongest it's been since 2002. The euro, which at one stage was over 140, so $1.40, an American dollar and 40 cents would buy you 1 euro. So the euro was more valuable than a dollar on a cost exchange basis. Now, this year, they actually went to parity, which means that it was the same. So $1 could get you 1 euro. That's the strongest the dollar has been in 20 years. So what effect does that have on the markets? How does that affect us? That's what we're going to go into today. We'll talk about the U.S. petrodollar, the global reserve currency system. And right now, we're just going to launch with a song, and we are going to hear, let's have a look. We'll do Shake by The Head and the Heart. So that was Shake by The Head and the Heart. So today we're talking about the US dollar, and one thing we are going to look at in detail is how the US dollar became the global reserve currency that happened to take place in World War II. So if we go back in history, we'll see at some stage the world's main power, monopoly, superpower, actually had the dominant currency. So in the 20th century, since World War II, it has been the US dollar. Prior to that, up to the 1940s and in the 19th century, it was the British pound when we had the British Empire ruling the world, essentially. Before that, it was the French. 17th century, it was the Dutch, the Netherlands. 16th century, it was Spain. The 15th century, it was Portugal. I've actually heard it say that before the Industrial Revolution, whichever power controlled the territory with the tallest trees controlled the world. Because the tallest trees led to the longest masts, and the longest masts on a ship led to the fastest ships. Hence, you won naval warfare, because up until the Industrial Revolution, naval warfare was won by sailing boats. So essentially, we've had a main currency that was the global reserve currency throughout the world. And since World War II, it's actually been the US dollar. So what happened in World War II? So the United States joined the war effort a little bit late because it wasn't fought on U.S. soil. It was fought on European soil. And at the end of it, they actually came out in better position than the rest of the world. So a few things happened. One was we set up the United Nations and what was called the Bretton Woods Institution. So Bretton Woods is a place in America. And they had a meeting there amongst economists, and they set up the Bretton Woods institutions. The key main organizations to come out of that were the International Monetary Fund, the IMF, the World Bank, and the World Trade Organization, the WTO. The IMF, think of them as like the world's accountants in a way. They actually do lend money to member nations. The World Bank comes up with programs to help impoverished nations, lends them money, and sets up infrastructure projects for that. The WTO comes up with rules and regulations with how organizations trade with each other, and they even have a judiciary where they can impose fines and fees on people who are not obeying the rules. This has happened several times. Another thing that happened was the Marshall Plan came about. So the Marshall Plan was, in essence, America started manufacturing again after the war, and they said, well, what we actually need is people to sell our products to. So, and Europe was decimated by the war. They had to rebuild. So American dollars were shipped overseas, and it was a very small interest loan to Germany, to France, where they could rebuild their economies. And this actually created trading partners with America. So it benefited both. Europeans received funds to rebuild their economies, and the Americans created trading partners, created consumers. So we've had dollars going overseas at the end of World War II. With the IMF, the World Bank, and the WTO, we had loans going overseas. When those loans are repaid, they are repaid in U.S. dollars. So the Marshall Plan loan, IMF, World Bank, fines with the WTO, all this is repaid in U.S. dollars. The other thing that happened was the emergence of the petrodollar system. So the world's commodities, when you talk about the price of oil, barrel per oil, it's actually referenced in U.S. dollars. Because when you buy commodities these days, you have to buy U.S. dollars. So let's say a company in Brazil has to buy some petrol from Saudi Arabia. Now, Saudi Arabia is not going to accept Brazilian reals because they don't need them. So what they do is Brazil pays in U.S. dollar. So every country around the world, when they're buying commodities, be it oil, cocoa, anything, they're actually trading in U.S. dollars, so they have to hold U.S. dollars in reserve. They have to have access to U.S. dollars. And there are departments of this in central banks, in governments, and in corporations where this is what they do on a daily basis, is make sure they have enough U.S. dollars in reserve so they can buy the commodities that they need so that they can trade with other countries and corporations overseas. Now, the U.S. itself is in a position where it doesn't have to do this because they're printing their own money. So they print U.S. dollars, they sell those U.S. dollars overseas. So this is called an exorbitant privilege where you can create what you are selling. They're creating the U.S. dollars themselves and selling it overseas. So this has led to some problems in that what happens if it gets too expensive to buy U.S. dollars? And this is actually what happened in 1997 when we had the Southeast Asian financial crisis. It started off in Thailand, where the Thai baht, the local currency, was actually depegged. Now, what does that mean? So to this day, there's still many small countries around the world, a lot of oil-producing countries, where their exchange rate is actually pegged to the US dollar. So it might be Bahrain, I believe, is one of them, where they go, okay, 20 dirhams is $1 US, and they try and maintain that. The Hong Kong dollar as well. They're a small economy. They don't want to go through the volatility of fluctuations in their own currency market because it can upset their economy too much. So we talked about the US dollar is now reaching highs. If you're a small economy, that would really hurt you. Because think of it this way. If you have $1 million in reserve of US dollars in reserve, $1 million US in reserve, and you need to buy oil for the next 2 years. Well, all of a sudden the price of oil has come up, so you've got to pay more. So that means you've already lost in your currency. If this keeps happening and your currency keeps losing value against the US dollar, your purchasing power is severely diminished. So this is called a pegged currency when you go, okay, my currency is pegged against the US dollar. So if the US dollar goes up, our currency goes up because we don't want it to affect how much commodities we can buy. Now, this is not uncommon, having a currency pegged. 100 years ago, the majority of world's currencies were actually pegged to gold. So they didn't move as much. We didn't have these huge fluctuations in currency markets. When we basically see, so right now we're seeing the US dollar go up. So, and this, if you've ever paid attention to markets, you wonder, why does this happen? So let's say some negative news comes out of New Zealand, and we'll see the price of the Kiwi go down. So some negative news has come out. The Kiwi dollar goes down against most currencies. Say it goes down against the Chinese renminbi, goes down against the US dollar. You think this is negative for the country. So the price of the New Zealand dollar goes down because we've had a negative shock. But what then happens to the share price of companies like Frontiera, which export a lot? All of a sudden, you start to see, as the New Zealand dollar is going down, the share price of these companies starts going up. Why is that? You think something negative has happened. So the way that you look at it as this: Frontiera, say, sells a liter of milk, and their profit is $1 per liter to China. When they bring that money back, because the New Zealand dollar has gone down, they're actually bringing more money back in the future because they're making money in exchange. When they sold it, it may have been $1 equals 10 renminbi. But when they're bringing it back, the New Zealand dollar has come down, so they're making more of a profit. So when the New Zealand dollar goes down, people are already predicting that in the next quarter, when Frontiera or other companies release their earnings, they're actually going to make more money than people expected, not because they sold more, but because when they brought the money back from overseas, the New Zealand dollar was lower, so they made money. And by the time it actually comes round, the news comes out, earnings are up. You'll eventually find it might go up for a little bit, but it will come down. It's called buy the rumor, sell the fact. So people, by the time something's hit the newspapers, the trade's already happened, you're a bit late. So we see what's happened is the US dollar is basically, you can't escape it. You filled up your car, you were involved in the US dollar transaction because the US dollar is used to buy petrol. The US dollar is used to buy all commodities. No one can really get away from the US dollar. And that's been the case since World War II. And this is what the exorbitant privilege is. And when the dollar goes up, it creates problems overseas because it's expensive for those countries to continue to trade because they need more dollars to buy the same amount of goods. Okay, I hope that makes sense. So let's move on. Now, all currencies eventually do come to an end. No one's really using the British pound anymore. No one's using the French livre, the French franc. French franc doesn't exist as part of euro. So all currencies eventually do come to an end. Possibly the tipping point for this, the demise or the end of the US dollar, could have been 2014. So something very interesting happened in 2014. The U.S. had sanctions against anyone trading with Sudan and Iran. And a few banks did, and they got fined for doing so. But the biggest fine went to BNP Paribas, which is a French bank. Now, they are a bank headquartered in France, and they were trading with Iran and Sudan. Now, the U.S. had an embargo, they had sanctions against U.S. companies. But this was a French bank based in France that was trading with Iran and Sudan. Now, France did not have any sanctions against those countries. But what happened was the French justice system stepped in and said because they were using the U.S. dollar, they were in breach of U.S. sanctions. And it went to court, it went to the international courts. And BNP Paribas actually had to fork out $9 billion. Half of that was fines. The rest was what the profit that they made. So that was a huge moment in international relations and finance because it was, even if you are not a U.S.-based company, because you use the U.S. dollar, you are then subject to U.S. laws and regulations. And at that stage, you could argue that's when people said, okay, well, we kind of need a system other than U.S. dollar because this is just not fair. All right, we're going to talk about that more in a second. I'll give my voice a rest, and we are now going to hear from Sing Along by Sturgill Simpson. Thank you. That was Sing Along by Sturgill Simpson. For those of you just joining us, this is Faris Mali on Fix the Money, Fix the World, coming to you on Monday mornings, 11 a.m. on FreshFM. So today we've been talking about the U.S. dollar and essentially how it is unavoidable to not use a U.S. dollar. You would have used it even though you don't realize or been involved in U.S. dollar transaction, because U.S. dollars are actually involved in the trade of all commodities, be it coffee, oil, cocoa. I want to say oil, I mean petrol. The world's commodities are traded in U.S. dollar. Any global debts, be it to the United Nations, the IMF, the World Bank, these are repaid in U.S. dollars. So the U.S. dollar is all-encompassing, it's everywhere, and you can't avoid it. And we talked about how in 2014, one key point, a turning point, was a lawsuit against BNP Paribas. And since then, since 2014, we have actually started to see some alternatives come out to people using the U.S. dollar. When I say people, I mean governments. So when sanctions came up again against Iran a few years ago, Iran and some European countries talked about how do we bypass the SWIFT system. So the SWIFT system is the bank-to-bank. So it's how banks transfer money to each other. They've got to use the U.S. dollar in doing so. They talked about how do we bypass that. In the last few years, the majority of Western powers, this is Western European and North America, have actually been selling their gold reserves. And China's been buying them. So in the last decade, China has been buying a lot of gold. And a few years ago, what they actually released was a new gold exchange. So with this, if China wanted to buy oil, they'd have to buy it in U.S. dollars. If they want to buy oil from Russia, they would have to give Russia U.S. dollars. That's how trade was set up. But China actually gave an alternative. They say what you can do is you can buy Chinese renminbi. If you don't want renminbi, then you can. We have gold. We can exchange that renminbi for gold, or you can buy renminbi backed in gold. So they actually gave Russia an option where they'd say, okay, you might not want the renminbi, which is a Chinese national currency, but you can have gold instead. And that actually launched a couple of years ago, and it's been starting to do very, very well. And talking today, when we're a few months into the war between Russia and Ukraine, and there's a lot of tension between Russia and the United States right now. Well, Russia recently announced that along with Iran and China, they're going to start trading with each other. So Russia will sell their oil, Iran will sell their oil to China, and avoid using the U.S. dollar altogether. Turkey also has joined in, and Turkey has actually had a real collapse in their currency. So the I think it's a lira. I'll have to check. Correct me if I'm wrong. The Turkish lira has basically lost so much value against the U.S. dollar in the last couple of years, and this has caused inflation in the country. So to them, this is an issue. So what do? Well, we're going to start looking at options where we no longer need to use the US dollar. So if you're joining us a bit late, earlier we talked about how we've had global reserve currencies or a monopoly of currencies around the world. Before the US dollar, it was the British pound. Before that, it was the French, and so on. We can go back and see what was the main currency used around the world. Since World War II, it has actually been the US dollar. Now we're starting to see cracks in that, and countries, governments are looking for alternatives. How do we not use the US dollar? And where's this going to lead to? So the petrodollar system, which has been around since World War II, is starting to have some cracks in it. The relationship between Saudi Arabia and the US right now is a bit turbulent. The United States has relied on Saudi Arabia for their oil. The United States has actually been selling their strategic reserves, which is oil that they keep in case of an emergency. And they've actually been releasing it. They've been using their strategic reserves in oil because of the high price of oil in the USA. And that's not what it's there for. It's there for emergencies. Not price shock emergencies, but geopolitical emergencies. So we are seeing tensions in the legacy system of the US dollar and the petrodollar, and cracks starting to happen. I know economists have been calling for the demise of the US dollar for quite some time. These things do take time. If you do look at the chart of the DXY, you'll basically see it has rebounded as it is now. But think of this like a ball, when a ball bounces. Each bounce is not as high as a previous one. And we may be at the third final bounce of the US dollar. But again, this is not science. This is an art. So this could be the end of the US dollar as we know it, as far as the global reserve currency. We could be looking at a future where I don't think a single currency will take over. That was what economists believed the euro would happen. The euro would basically overtake the US dollar. It hasn't done that. We may be looking at a situation where we have more than one global reserve currency. We have a multitude, and we do not have a dominant single currency around the world. There'll be options available. So there's a Chinese renminbi backed by gold. Bitcoin is another option that is gaining a lot of steam. So we could have several different options to not replace, but to usurp the US dollar. The US dollar will always be there. Well, not always, but the US dollar is not going away. 30% of global wealth is actually tied in US dollar. So it's still seen as what we call a risk-on asset. When things are not going well, people tend to buy treasury bonds. These are bonds issued by a government because they're seen as safer and less risky. To buy U.S. Treasury bonds, what do you have to do? You have to convert your national currency, the currency that you earn, into U.S. dollars. So you're buying U.S. dollars so they can buy U.S. bonds. By buying U.S. dollars, you're making the price of U.S. dollar go up. So 30% of the world's wealth is actually concentrated inside the U.S. because people buy real estate, people buy bonds. And this is what we see. If you make money in the developing world, I don't like that term, but let's use it, China, Southeast Asia, Latin America, what do? You send that money to where you think is safer. You send it to the United States because it still has that safety risk attached to it. So the US dollar is very strong. We are seeing cracks that maybe it's coming to an end. How does it affect you in your everyday life? Currency markets, how your currency is trading against US dollar does actually affect the price of petrol, the price of goods. And with companies and corporations that you invest in, it does affect how much money they will earn. Hope that makes sense. Please remember to go to farismali.com and I will include some show notes for this one. Thank you for tuning in, everyone.
The podcast you just listened to was a live recording of a radio show, first broadcast on FreshFM with support from New Zealand On Air. FreshFM is a community access media station based in Te Tauihu, the top of the South Island, New Zealand. The funding of Access Media makes these podcasts possible. To find similar programs by other community access media stations, go online to accessmedia.nz. If you or your group would like to know more about how you can have a program on our station, please contact us. Visit our website freshfm.net for our contact details.